allow me to get a volunteer as well to kick us off with a word of prayer. Any volunteer? Lillian, would like to volunteer prayer? Becky? Pray? Pray for us. Thank you.
Let's humble ourselves for a prayer. Father God, we thank you for such a wonderful morning. We thank you for the gift of life. We thank you for everybody in this room, my King. We thank you for the fund. And we thank you for the reason why we exist. Lord, we ask you to have mercy upon us, my King, because your mercies are new every morning. May they flow to each and every one of us in this room, in our organization, my King, to our customers and in this land. Lord, we surrender this meeting into your hands and the launch, and we thank you that thus far we have come. We pray that every single bit about this product, Heavenly Father, will spread to every working Ugandan. In the Lord's name we have prayed. Amen.
Thank you, Rebecca. Before I invite Patrick, allow me to recognize the key partners who are present. There are 3 categories. 1, we had the product development partners, and these the payment platforms basically. We have MTN Uganda, I hope they are represented. We have Airtel and Stanbic Bank. Those were our development partners. Second category, we have partners who are the target of this product. We have the workers, we know they're represented by NOTU. We have the SMEs, who are represented along with the informal sector, represented by the chairman of the Kampala City Traders Association. He's here with us today. Thank you for coming. And finally, the public service, believe it or not, they are also a target for this product. And we are privileged to have the permanent secretary at the Public Service Ministry, Mrs. Catherine Bicharakwade. Thank you for coming, madam. Lastly, also allow me to appreciate the NSSF in-house product development team. They are here represented. They were the brains behind this product, and we are very happy that finally we are ready to launch. Ladies and gentlemen, without further ado, allow me to invite our Managing Director, Patrick Ayota, to address us, after which we launch the new voluntary savings plan. Thank you.
Good morning. Good morning. The reason why we offered breakfast so that we could have more energy in the house. Good morning. Yeah, now that's better. Now, if you ever heard me speak before, I said, I used to teach in a little primary school called Nyem Nyem. There was something very beautiful about teaching in a primary school. However broke you are, when you walked in and you say, good morning, pupils, how they respond? Now some of you think you didn't go to, let me hear you. It wasn't just teacher, there was a little word they added in, the 3-letter word, sir. Good morning, pupils. Even if you're broke that day, you felt good. Okay, so you're welcome to this product. So we'll just kind of go just a little bit as fast as we can in terms of just the evolution where we started from and why we are doing this. I hope you guys can get it together there. We did a research, and this was way back. This was confirmed again in 2021. Most Ugandans were complaining that they did not have adequate savings. In fact, this number seemed to be a bit more optimistic. Because COVID showed us, it was not just that 60%, but over 90% of Ugandans did not have any savings. We know it's true because right today, 98% of the members of the fund who come for their money, that's the only savings they have in their lives. 98%. So there is inadequate savings that we have in this country, and yet we know we want to save in that case. And you find that the reason people give for saving more, why they wanted to save more during our research, they said, if you are between 0 to 34 years old, there are things that you are thinking about, a little bit about retirement. You are thinking about possibly, you think about retirement. Let me get this back together. Education, capital accumulation for business. As you get between 34 to 50, you think about retirement also. Education, housing kicks in, medical kicks in. Over 50 years, you are really thinking about retirement. Interestingly enough, survey showed people think about education, but at that point, it's not the education they think about. They think about their grandchildren, because guess what? A lot of us grew with our grandparents, and they think about this, and then, of course, medical. Interestingly enough, across the entire spectrum, you find that people actually think about retirement. And that surprises us because we think that younger people do not think about retirement. The truth is, it's at the back of their mind. And I'm going to give you a statistic that will kind of shock you. Today, over the last 7 years, we've been tracking it. Only 3% of the benefits we pay are paid to survivors. In other words, the member passed on. The implication is 97% of the benefits we pay are paid to people, members who are still here, which is good news. So some of you have been thinking that, I'm 25. No, there's no way I'll reach 55. There's a 97% chance you're going to reach 55 and you'll need that money. That's what the data is telling us. And it's interesting that across those age groups, people actually think about retirement as it is. So behind that, in 2022, the president said to the National Social Security Fund on 2nd January 2022, and one of the biggest objectives there was to expand Social Security coverage. Importantly, they reduced the threshold. Up until that time, the only employer required to register with the fund was one who had more than 5 employees. As of January 2022, that threshold is 1. So if you have got, you're an employer of 1 and it's you're required to register with the fund. But didn't do that. Now open up the voluntary for any member, any Ugandans, whatever they want to do in that case, and empower the board to introduce new benefits and products. And this is one of the first products that they've come up with. So if you look at the landscape where we are today, right now we have a membership of 2.3, but there's about 1.2 million Ugandans who are in the formal sector who can actually save with the fund now on a voluntary basis. About 8.7 million Ugandans in the informal sector or self-employed. We've got about 781,000 in the diaspora. All these opportunities that we have as a fund and for the country. By 2035, and I'll tell you why 2035 is important to us, that number goes to 1.7. We've got about 12 million Ugandans in the informal sector, about 1 million Ugandans in the diaspora, which basically means that we can actually have a membership of 15 million Ugandans saving with the fund by 2035. And that's actually is our target because it's reflected in what we call a Vision 2035. The fund runs a strategy cycle of 10 years. We are now in the tail end of our strategy cycle that we started in 2015. It ends next year, June 2025. We've already come up with the 2035 vision, what we want to be, what we want to look like by 2035. And it's basically marked by 3 things where we want to be. When in 2015, we set up a strategy that in 10 years' time, by June 2025, we needed to have the following 4 things. 1, we need to have grown the fund to 20 trillion shillings. By then, we're 5.5 trillion shillings. Good news is we hit 20 trillion shillings in January this year. So we hit 20 trillion shillings 1.5 years before the target. We also knew that to get the 20 trillion shillings, you need to make sure you serve your customers, your members, so well that they are satisfied with you. And we set a target of 95%. In 2015, that number was around 73%. As of last year, that number has gone to 87%. We still hope to get to 95% by the end of June 2025. To do those 2 things, we need to do 2 things. 1, the people who serve you, our staff, they must be so engaged with the fund that they will serve you so well. By then, the satisfaction rate was about 72%. Last year, it is 89%. Target's 95% for this coming year. And we have to give you technology that we can process your benefits, especially your age benefit, within 1 day. By then, we're processing in 36 days. By the end of this Last year, we processed 7 days. Right now, we are processing as 3 days age benefit. In fact, by the time we're done with technology, you don't even have to come to the office. You will actually touch us from your bedroom and pay your age benefits. Because we know where you live, we know you work, we know your phone number is, we know your need. Hey, we can even pay in 30 minutes as we do that. So those are the things we set up. So 2035, this way we want to be. 50% of Ugandans having a savings account with NSSF. Right now, that number is 14%. And the problem with that is we can't say our purpose is to make lives better, and we're only making it better for 14% of working Ugandans. That's just an oxymoron. We can't do that. We have to expand that coverage. We want to grow the fund to 50 trillion shillings, and then we want to do it that our service levels never go down. That's our target for 2035, what we want to be in 2035. Why is it important that we actually get there? The implication is basically that now we have the power as a fund to innovate and to bring more benefits to Ugandans. Many of you have seen this slide, but I'll just go in. If you take at a national level, why is it important that Ugandans need to save even more? Take an example of Vietnam. Let's look at Vietnam. It's an interesting country that you look at Vietnam, you can close your eyes, replace Vietnam by the word Uganda. Look at the history. An agrarian society, that's what we are. Emerged from devastating wars, so we did. Major coffee as an exporter, so we are. Okay, revolutionary leadership. Now some of you say, Patrick, really? I'm going to tell you something. Please, guys, don't shoot me here. A man who can convince 27 of his comrades, let's go to the bush, get 27 guns, and overthrow a government, whether you want it or not, is revolutionary. Would you agree? So same history. Look at number 5, gifted in natural resources. This is actually Uganda. Look at the intervention Vietnam did. Liberalize the economy, so we did. Looked at attractive die, so they did. Had policy or has policy on validation and industrialization, so we do. And policy on export-led growth. You could have just said, we look at each other and make the same policies, and what happened? Now let's look at Vietnam today. This is the GDP of Vietnam. Basically, projected to 2028. 2025, 2023, Vietnam is right around $550 billion as an economy. Who knows the GDP of Uganda? 55 billion. Vietnam, and yet where you see where we started from, in 1991, 1987, 1989, $8 billion. And they exponentially grew to $550 billion. Now, guys, when the president says we need to be a $550 billion economy, I used to think that he was pulling that number from the air. No, he had a reference point. What did Vietnam do that they grew 10 times and then we almost started this? We had the same history, same interventions, same place that we started off with. And they grew that fast. Now, there's a couple of things they did. State intervention agriculture. I want to even talk about that. We're trying to do something about that. We'll come back one day and tell you what we're doing in that area. But look at the second thing they did. They mobilized domestic long-term savings. And why was that important? Because then they could use domestic long-term savings to drive their development agenda. Take a look at this graph. This graph shows you something very interesting. They began their major economic reforms in 1989. With us, we began in 1996, about 7 years later, by the way. Look at their GDP, their savings rate against the GDP in 1989. It was less than 10%. So they began to save, pushing it. The gray bars shows you their GDP per capita. And right now, by 2021, they were saving 35% of their GDP was long-term domestic savings. They could drive their development agendas. Look at what happened to the gray bar. Their GDP per capita is slightly over $3,000 per person. Ours, we are barely crawling into 1,000. Sometimes we are 1,000, we fall back in terms of it. So there is a need to save. The reason why we need to save is we can have local savings to drive our agenda. And I'm going to say something here that may be controversial. So somebody doesn't dangle their rights of our head. We are not going to give you money because you are stepping on certain people's rights, and we all panic as Ugandans. The day we are able to fund some of our things on our own, to empower us, and as a country we'll be liberated. So it's important that we Ugandans save in that case. So our solution was this, the voluntary savings plan, a voluntary goal-based plan. Any Uganda can open up an account, and I'll go through the features of that you can now have an account with NSSF. For you, it's yours. It's not for NSF. We just encourage and are able to do something that you need. We really want you to think about, begin to think a little bit, because the problem with NSF was where you think about you when you're either old, sick, dead, or you moved out of the country. But we know you're still here, so this voluntary is supposed to close that gap. So you can think about some short-term needs, mid-term needs that you can actually save for in that area. You can top up. So even if you are now saving the NSSF monetary person, you can top up. That's called a voluntary contribution. If you've left the fund, you can contribute. It doesn't matter. You can still become a member. Or anybody who says, I just want to get in the place where I can save with a purpose, with a goal in mind. The key features are this. Any person, and this is the regulations, any person can make voluntary contributions. And I said, even if right now, when you're making that, a member may have a sub-account. If you come as a member and you're already saving with us on a mandatory basis, we'll open another account for you called a sub-account. And you name it for whatever you want. For a house, for education, for health, for a minor. So you can even begin saving for your child. And you designate that account for your child if you want to. The minimum amount is only 5,000 shillings. That's minimum. Now I know that people who are bothered say, but me I want to save 1,000 shillings a day. That's okay. Just save, keep it on the side, 1,000, went to 5,000, send it to us. And then you begin to save in that process. And you can save, you can state whether you want it weekly, daily, quarterly, annually, or another frequency. The key to savings is consistency. It's not the amount you save at once that matters. You can decide to save 5,000 shillings a week and you're consistent. For 52 weeks, you will be amazed at what happens to that money because you've been consistent. So our job is to help you, our members, get the discipline of savings. Key features is focused on either passage of time. So we have either 1, 3, 5, 7. You choose it, or purpose, education, whatever you want to do, because we want to be very deliberate on how you want to save. You may have more than one goal, or you may have more than one sub-account. You can say, okay, me open for me 3. This for my education, this for my health, this for my child. Whatever it is, it's okay. We run it with it until we'll be okay. I think you guys will like this. I know Paul will love this. The return is not like the mandatory return, the interest. It's computed on a daily basis. Interest earns interest on a daily basis. But when you look at your statement, we'll do that and then credit it, that accumulation once a month on your account. But if you want to look at the details, that's something that's very unique. That computation starts 3 days after you've made that deposit, because that's when we're able to place your money in that case. It will be competitive based on market conditions. Now, some of you say, are you going to be better than unit trust? Yes. Andrew, please. We'll be there. So you don't lose. But ours deliberate. There's a reason why we're trying to do this. There's one thing that you'll find that's true. There's a lock-in period for 1 year. You say, but why? I'm volunteering. Why are you locking me up for 1 year? We don't want you to think, what do you think? Saving want to take you a bit long. We want you to think long, a bit mid-term to long-term. Not just put it in and take it out. That's why Andrew is there. Andrew, you can go put in this money, take it out. That's not savings. That's just gamble. But now I want you to think about savings so that you can think a little bit more. However, an exit is permitted. If you have an issue that comes up, you come and we talk to us, and you can actually be able to get some money from your account. All right? This one you will love. We don't have this yet, but you're going to love it. We are now negotiating with some of our partners to bring you other products on top of that. The very fact that you are now a member of the fund and so on. Stanbic, we are talking with them. FlexPay. Think about this. You're a market vendor. You've saved $1 million shillings with a fund. You wake up one morning, you need a capital for 500,000 shillings. And you need it now. Our partner, Stanbic Bank, say, just get on your phone, dial, 5 minutes they've given you your money, you go get your capital, trade in the evening, pay them back, you're fine. And you're able to do the things that you want to do. Negotiating insurance so that you can now have medical that's affordable because we are bringing numbers to the table. You'll pay for it, but it's more affordable for the things that you want to do in that case. Who is eligible? We just said, anyone in the formal sector, the diaspora, self-employed, public service. Now that every Ugandan. What do we think will work? It's choice. You choose. It encourages long-term savings. You choose how and when you want to save. We hope it brings a discipline in you. Affordable, as we said. And this is both minimums and then the opportunity to save. It's flexible. You can sign up now. Right now, today, some of you are going to a demonstration. You can actually begin to save. On the network, you can go to a branch. Or better still, if you have MTN, you can actually do MTN. Airtel is coming on board. So you have a number of options for you to sign up. You sign up, even when you want to withdraw, you can actually do it on the mobile phone. You can open as many Smartlife accounts as you need, and the exit is simplified. Competitive return, like I said, this is as good as you get in the world of finance. All right, what happens to existing members? Suppose there are people who have been contributing on a voluntary basis. They left the fund, but because they had the number, they can continue to that. If you have that, you will have 3 options. Me, I would encourage you to take the last one. The second one, just come and tell us, transfer my balance to a program savings account. Because if you don't, then we'll continue to treat it as if it was mandatory contribution. So you make that choice now, and you have 12 months to do it. So you can come and tell us, go to a branch, transfer the balances I had into a program voluntary product, so we can actually have that. All right, I think we have a demonstration now on how you get on top, and then we can actually do that. Okay, we are ready? All right.
Thank you, Patrick. We would like a volunteer to be the first member of the NSSF Smart Life. Yes, please. Thank you. Can we have the screen in the middle a bit, please? Patrick, as they bring the screen towards the middle, allow me to recognize a few other partners. We have partners from the International Labour Organization. They were instrumental in supporting the feasibility study for the NSSF Smartlife Flexi. They're here with us.
And we'll really use them because we really want to encourage the diaspora to save, because many of them sometimes go overseas, they work, they send money to relatives, they come back, and they find out that that money was never saved. And we think an opportunity for them to open an account and they can continue to send money to their accounts. At least when they come, the money is there and they can do something with it.
Thank you.
So, ILO will rely with you. Thank you.
2 other partners, Patrick. These were consultative partners from the Ministry of Gender, Labour and Social Development, as well as the Ministry of Justice and Constitutional Affairs. Very instrumental in consultation.
Thank you very much. I think they are the ones who helped us come with regulations that are robust, that are giving us a framework under which we can operate. Thank you very much.
Okay, we have a volunteer. Yes. Yes, please come on board. Patrick, I would like also to call the board chairperson to join you.
Mr. David Ogong?
Yes. As well as one of the representatives of the target group, CASITA chairperson, Mr. Musoke, to join you as well.
Aren't we going to use this screen? Can they see? No, but the people can see. We don't want to block them. Okay. All of you can see the screen, eh? Okay, so, all right. Please tell us your name.
My name is Vanessa.
Okay. Do you have a voluntary account?
No, I do not.
Okay. All right, so you get started, and this is something you are going to see when you get on your phone or screen. It says, invest in yourself, smart life plan, get started. Yeah. Yes. Put your phone number, mail. Please, she's going to put her real number, so guys, don't record it. I know some of you are taking this number to call her. Please don't. Okay. So now you put in your phone number. A code is sent. Yes. Okay. So now it says you've got a mandatory account, so now you can enroll. Because she's never been a voluntary member, it gives her the option of enrolling. Now this is real. I know some of you, your eyes went where it shouldn't go. Okay, so you can clear and start if you want to do something. It asks, So it asks you the purpose of the account. You can click there. It has a drop-down menu. Okay, go to the account nickname. What account name? Now you can call it anything you want. Okay, it will ask you, what's your target? Remember, we want to be clever about what's your target for that investment that you want, and you can put whatever amount. And then go down to how long do you want to save for? 3 years, okay. How often do you want to monthly? Where is your income coming from? Tap on that. This is for KYC purposes. We don't want you to money launder through NSSF. So we need to know where this money is coming from. Okay, and then count of residence. So you can continue. Now you can choose the bank you want to use for paying. For now, you can skip the bank since you're going to use your mobile money. So you can just do skip. Otherwise, normally it would be a bank. Okay, say yes, skip bank. Now you can pick Airtel or Momo, but we use Momo for now. That one. Yes, the mobile number you confirm it is the one, which means you can put your cousin's mobile number and you take mobile money from the account. But don't forget they're going to send them a message. They need to do what? To confirm it. So you can't do that. Okay, go ahead. You create account. Okay, now check your phone. So it has sent a confirmation message to that phone number. That's why you can't use somebody else's number to do that. And she'll be telling you whether, what's that?
You have approved a debit.
Okay.
You have approved a debit of 5,000 Uganda shillings.
So now Vanessa has got a Smartlife account. The reason why you need the 5 million is eventually you should be able to go and see where is that thing. I need to see where you can have your numbers. Your account, can we do the account number, the account thing? Because you should be able to tell you, my friend, you've been depositing only 5,000 a month, but you said your target was 5 million in 3 years' time. It seems you're not going to get to your target unless you accelerate the savings rate. Where did they go? Where did they go to the account? So now you can view accounts, go there. So you can see this is what's telling her. You said you want to invest for 3 years, your target's 5 million. Your account balance right now is 5,000. Do manage account. And you can look at that, it brings up, you can look at the details, your account statement, you can make a contribution. See, it actually give you the details that you want to do in that case. And as you go through it, you become smarter and smarter within. It will prompt you saying, the goal you set for yourself, you're not getting there with this rate of savings. You need to save much more. The good thing is each month then you'll see the amount of interest that has been credited to your account based on the activities you have. So it's as simple as ABC. Do you agree? Thank you very much. So let me just hand over the chairman to say a word, and then we'll take the questions.
Thank you very much. The Permanent Secretary, Ministry of Public Service, Mrs. Catherine Musingwiri. I think she's around somewhere. Our development partners, MTN, Airtel, Stanbic Bank, representatives from the ILO, and the various partners that worked with us, Ministry of Gender, Labor and Social Development, we can't forget you, Ministry of Finance, members of the financial fraternity, financial services sector. I can see a number of you. We used to work with some of you. I can see, yes, you're there. You're all welcome. Members of the press, members of the general public. It is exciting when we have an opportunity like this one. We thank the government, the legislature, for giving us the opportunity of introducing products like the voluntary savings plan we are talking about today. People want to save. People want to grow. People want to retire when they have peace of mind. The how has been a challenge. The various members of the financial services sector have been offering various products that have been doing us well. The challenge is that, one, we are not aware of some of the opportunities which are there. And also, two, some of these services are not ubiquitous. They are not available everywhere. But now we have an opportunity with the NSSF coming up with this brand new product, which is available to you in your hand every day. You can, using the partners that are available, MTN, Airtel, the banks, there could be other agents as well. You now have an opportunity to save. And the good thing is, there is choice. You can choose the amount. You saw the lady who was doing it here. You can choose your target. You can choose the amount that you want to put in every week, every day, every month, every year. You can vary the amounts. It may not necessarily have to be a fixed amount. Today you can put 5,000. Tomorrow, if you have 100,000, you put it there. And the longer you keep it there, the better the amounts that are returned to you. It is flexible. It is very flexible. And you can trust NSSF. NSSF has not let people down. You know it very well. People who have saved with us know that NSSF, your money is safe with us. So I encourage all of you, start saving with the NSSF. It's now open to everybody, not just members, not just workers. It is now open to anybody in my village, in your village, in the cities, in the town, everywhere. So join the Smartlife Flexi program today. Thank you.
Thank you very much. Good morning, comrades. I'm Dr. Musoke Thaddeus Nagenda, a chairman CASITA Uganda, a non-medical doctor about PhD. I'm happy for this new innovation. As CASITA, we are great partners with NSSF. And you know, CASITA has been transforming. Before CASITA, people had a very bad perception towards CASITA about riots, striking. But we are transforming, strengthening partnership with government agencies and the general public. I have a small story just I want to reflect on this new innovation. When I was still more in the journalism industry, we started a project called a Kaboxi. With this Kaboxi, we could reward the winners. And ladies were champions in this innovation. And we allowed them, you can save a coin, a what. But later, I was shocked one time on an event. A lady came with a jerry can full of money. And when we counted it, it was around 10 millions. So what does it mean? That you can save as small as possible, but later you can attain your target. Unfortunately, one of the comrades came complaining. Hello, doctor, you are promoting the Kaboxi, but do you know what happened? This one was a gentleman. So when the lady had plans to run away to abroad, the lady took the kabox. So I think with this new innovation, it cements the culture of saving. And easily you can trust NSSF. And I'm sure our members will embrace this. You know, we started a small project as CASITA called Tegeka. It had almost the same features with this. And at first I worried that it cannot work. But I was shocked with the way the trading community embraced it. I'm sure with our partnership with NSSF, we shall champion this innovation to make sure it adds value to the trading community. And lastly, in Uganda, we have a very big culture whereby we avoid accumulating capital through saving. And we opt to very expensive loans, whereby our members' property sometimes are auctioned until CASITA comes in to negotiate and mediate. So I'm sure with this, you can easily plan and attain your objective. I want to thank the management of NSSF and the partners for the new innovations. For sure, the moment we have been with NSSF, you hear CASITA crashing. Who have any negative comment with the NSSF? The great management, Mr. Patrick and the team, please keep it up. Secondly, I think some of the feedback we get is being adopted. Such innovation, it keeps NSSF on ground. It shows good leadership, because when your eyes are on ground, innovation is eased. So please keep it up. Lastly, I want to use this opportunity, Patrick, to invite you on 4th December. We have the annual business community dinner. We need to champion this innovation because we are going to host over 1,000 trading community. And this event, this time we are not CASITA alone. We are with the Presidential CEO Forum, we are with WUMA, and then CASITA. Thank you, I submit.
Thank you very much. Victor, thank you.
Yeah, thank you, Patrick. Question time from our audience and members of the media. Given this is a legal issue as well, our Corporation Secretary, Mrs. Agnes Ishaza, will join Patrick to answer any questions that may require some legal interpretation. Thank you. Member services as well, Rebecca Kabugo, you're around here. Also join Patrick to answer questions that may be addressed to member services. Thank you so much.
Hello, good morning. My name is Deogratius Famala. I write with National Media Group. I have like 2 questions. I wanted you to tell us briefly, okay, can tell us about the competitive return that you talked about and how it will be. The other thing is about the regulation, because I understand that NSSF has a different regulator, and this space is also regulated by Capital Markets Authority. I wanted to know how that works out.
Why don't we take maybe 5 and then we can respond at once?
Sierra is my name. I report for the East African. You gave us Vietnam is a bit far. As maybe that's you, the person you have chosen called Vietnam. Do we have any such products in the region? Thank you so much.
Good morning. Victoria Nyans is my name. I'm a content writer. So there is somewhere where you spoke about daily, weekly, and quarterly savings. Are there any difference in benefits for saving daily, weekly, or annually? Thank you.
Okay, any more?
Good morning. My name is Benjamin Amuk. I write for Chin Reports and Kampala Scoop. Patrick, when you taking us through, you said that there's at some point where you have to put like a source of your income. But then I did not see the like verification. Like, how do you verify? You say that you do not support people who actually, I wouldn't want to say that, and it's actually I have a disclaimer that I'm not one of them. But how do you verify? Because we didn't see any process to verify that this money is actually coming from where you put it. So do you follow that person to really know where that money is coming from, or it's just a process, you just end it there? Thank you.
One more. Okay, while they're thinking, we can answer. I think, Agnes, you'll handle the regulations, the regulation question that he raised. Competitive return, how is that computed? Competitive return basically means you look at, when you invest in a basket of investments. For example, if you choose 1 year, that you want to invest for 1 year, it means that most likely I need to find an investment for your money that doesn't go past 1 year. I'll buy a 1 year bond where you put your money. If you choose 3 years, most likely I'll match it. I'll say, let me buy a 3 year bond, a 5 year bond. The blend of those returns is then what informs what comes to you. It's a very typical investment exercise that unit trusts use for the purposes that we have. So it's based on market conditions. Most people have said, hey, but how much are you going to give us? No. Professionally, I can't tell you that. I shouldn't tell you that. It is actually illegal for me to tell you that, because that tells me I'm forecasting something that's not in my market. As a financer, I'll give you, but the good thing is you have a view. You can actually see a lot of, you can compare us to unit trust, you can compare us to what the bonds are offering and things like that, and you'll actually be comfortable with that area. Agnes, the products in the region, who else is doing this? Uganda has the lowest savings rate in this region. I think our savings rate to GDP is about 14%. I believe Kenya is closing to 20%. Tanzania is around 19%. And if you look at the amount of development they've been able to use using their own monies, it's actually incredible. We have the lowest rate, savings rate in the country. That's why we pretty much, if you think about the last 30 years, we've basically been driven by donor community, our development partners. They've been kind of funding everything we do in terms of that. Now we're trying to raise the tax base right now, but even our tax base compared to the GDP is still low in terms of the things that we need to do. The benefits of saving daily, weekly, or monthly, the first major benefit is this. Think about this. If you're computing interest daily, that means that if you're saving 10,000 shillings daily, or 5,000 shillings daily, I'm computing your interest, you're earning interest on a daily basis, which means your interest will grow much faster than somebody who is investing 5,000 shillings a month. Because I'm still computing it on a monthly basis, but now, because this is coming more frequently. So the first benefit you're going to see is the balances under daily, assuming they're putting the same amount of money, will be higher than the balance put on a monthly. That's really the major benefit you're going to see in that area. How do we verify? The regulation has given the fund that within 3 days, we can reject your account. You open the account, you enroll, say you've enrolled, but the regulations exactly for that purpose has given the fund 3 days for us to take a look at, you put 100 million shillings. So we check a little bit, where did this 100 million shillings come from? And it's up to us to say, you're a good candidate or a bad candidate. And within 3 days, we tell you, need disable. We can't operate your account. So don't tell them they can get away with it. No, they won't. We have 3 days in which to verify that. I think something with the regulations. There's a question around the Omala. What was the question about regulations? Mr. Omala, where are you?
I actually thought that was the question.
You got it?
That was the question.
Was that the question? She was saying that we have regulations around. What?
So could you kindly repeat your question, just for clarity?
Actually, my question was, who would be the regulator? Because what you're doing is what unit trusts are doing, this. And they have a different regulator from what you've been having.
Oh, Okay, currently, NSSF is self-regulated by virtue of our act and the governance structure. So we have the controls in place through our governance structure. But for purposes of a product like this, we would be working, obviously, in compliance with the Anti-Money Laundering Act. Therefore, FIA comes into question, and regulators of the like, yeah? Capital Markets Authority, yes. So by default, those are the regulators that we would be interacting with in this respect. Good? Thank you.
Okay. And I think the chairman said, Mr. Malam, the chairman said a very interesting thing that actually NSF today is more regulated than any of the unit trusts you can think about. Maybe that's why we do quite well. The amount of controls, the amount of oversight, the amount, if people don't save with NSF, think they own NSSF, and they will call you to account. So the oversight is just intense and crazy in that case. Any other set of questions? Yes, somebody's here, please. Yeah, Christine's back there.
Good morning, everyone. My name is Collins from NTV. As we are giving the example of Vietnam, you said they managed to use their savings to invest in their economy. Save for bonds and the treasury bills and real estate, what are some of the things that you want to invest in money locally that are profitable?
Mr. Wera, you will answer that one, eh? Okay. Any other? Okay.
Actually, mine is like a follow-up on what Patrick, you said. Like what happens after the 3 days? Because I can at first pretend to have like 100,000. And then what happens after the 3 days that you're saying that you've been given 3 days to verify where the money is coming from?
Okay.
Thank you.
Now, Mr. Wera, where Teles are waiting about investing in. Mr. Kenneth Wera is our acting chief investment officer.
Okay, thank you very much, Patrick, and good morning, everyone. So this is not specific to the Smart Life, but generally what the fund is looking at. I think when you look at the country, we do have a significant deficit from an infrastructure perspective. So here we are looking at, you know, your roads, your electricity, and many other things. And I think one thing you will note from Patrick's presentation was that one thing Vietnam did was driving the electrification rate from about 14% to largely the whole country. When you look at Uganda currently, we're at about 40%. And the need in the sector is still significant. So our belief is that we can be able to actually identify some opportunities there where the members, NSSF, can be able to benefit from. Thank you.
Thank you. Follow up.
The last time we had a conversation here, you suggested you're going to put some money into infrastructure projects. You mentioned the express.
Kampala Expressway.
Yes, and then now we have the SGR. Are we going to see you put some little money there?
You will see us do that. In fact, let me tell you, the good news is this, and maybe many of you have dealt with NSF, you get frustrated, yeah? Because you think the process is too long. We actually are required and will do a due diligence however long it takes. So that when we put that money there, we realize it's actually a good deal. So it's still on the table, we still do it. When it all comes together, it will come together for that purpose. The question was, what happens after 3 days? After 3 days, we find out that, oops, Mr. Mala, your thing was not working. No. This 100 million shillings you came with, we block your account. Best we close your account. We send back the money wherever it came from. Most likely, you did not walk in with 100 million shillings in cash. It came from some bank account somewhere. We'll send it back there. And we shake hands. You go your way. We go our way. After 3 days.
Okay, Dennis from UBC TV. First of all, congratulations for the product. And my question will be about, of course, Smart Life looks so good. And currently, you know, Uganda hosts very many foreigners, for example. So people watch TV and maybe read in the print and ask themselves, how can I be part of this? Because I can see there's an option of pulling out. Definitely you can save some money, and after 3 or 4 years, so is there an option of people who are non-Ugandans to also subscribe to Smartlife? Thank you.
Yes, actually the provision of the law is embedded in that. For example, it actually does. It actually expects non-Ugandans can open up accounts. They live with the same rules that we have. Interestingly enough, the due diligence becomes more stricter there, because if you are not from here, we better know where that money is coming from. The good thing is you are not, most likely you're going to use the financial systems. And the financial system leave audit trails and so on. The bank itself you send that money through is going to confirm where the source of that money is. And that's how we minimize the risk of that. Okay. Yes, sir? We have like, I think, 5 minutes, maybe 2 more questions, and then we can.
Yes, morning. My name is Ali Toha from New Vision. I just wanted to get clarity on the taxation component. How does it apply? Should we assume it's the same as the CS, the collective investment schemes? Because they have fees on their side, but also there's the taxation. What applies in this arrangement? So you also talked of a customer has to set a limit. Are you saving for 1 year, 2 year? Should they stick to that? But also in the case they needed the money and you want to withdraw it for an emergency, which you had not planned for. What happens in that scenario? Thank you.
Okay. Rebecca, do you want to handle the one regarding the limits, the withdrawals and so on? So what happens with the limit? I think that's, then we can come to that.
Thank you, Patrick. The limits are exactly in what Patrick presented in his presentation. The minimum being 5,000, and you can choose your tenure according to your goal. You can also name your goal, either 1 year, 2 years, 3 years, and 5 years. Obviously, the longer you save, the benefit for you is that you'll enjoy the effect of compounding on compounding, so your money will be more. In terms of withdrawal, you can withdraw according to your goal. If you choose to withdraw earlier than your goal, you will lose out on the interest for the remaining part of your savings time. Thank you.
So the limit that you put in terms of your target is really is for you. It's really for you to remind you that the world is not going to, if you put 5 million at the end of 3 years, you have 2 million. Nobody's going to kill you. But that means that there was something, you need to relook at the discipline you have to remind you that you've set a target. Are you going to reach that target based on your current savings rate? It's really for you, which we think is worth it. Taxation plan, basically the same taxation regime applying to the collective schemes is going to apply to us. So there's going to not be a difference in that. The only ones, the unit trusts have a bit of a better tax advantage, but the unit trust wouldn't work for you for this reason. Remember, the idea for us is for you to think a bit longer term than today. That's why there's that lock-in period, that have this mind that I'm going to save for at least 1 year, and that discipline will kick in and you get to benefit in the process. And that's why the taxation regime is still the same as the collective scheme. It's okay, so we are under the same tax regime. So it won't be that it disadvantages us or disadvantages in that process. I think that's it. Thank you very much. Over to you.
Thank you, Patrick. And thank you, gentlemen and ladies. You've been a very great audience this morning. That brings us almost to the end of the launch. However, Mr. Chairman and Patrick, we'd like to have some photography with the key partners that are here with us today, and then we can call it a day. Thank you. So the payment partners, I think the Stanbic team is here. Mr. Chairman, if you don't mind. Okay. Yeah, Airtel, please. Yeah. Thank you. Can we take away that?